everyone? It's Jeb Hamwiger from GoldStockTrades.com. It's the week ending November 16th, 2018, and if we take a look at some long-term charts, especially as we get towards the end of 2018, we get a different perspective of what's going on in this market. And what we're looking at right now is the TSX Venture Composite Index, all the way back till the turn of the century in 2000. This is the index that all the junior mining companies and small caps that have ideas, venture capital, that's why it's called the Venture Index. This is where Canada has always been the global leader in mineral exploration, the commodity space, especially metals, oil and gas, energy. And they've always been the first step in finding these new assets that started on the Venture Index. And if you noticed here back in 1999, we're at lower levels now, in 20 years later, back in 1999. And if you see here, we've had booms, and then we had the 2008 bust. Then we had a 2-year window where it rallied, not as high as the 2007 high, and we rallied back and then have continued making a new low. Here in 2015, we made a new all-time low in the venture from when it went from Vancouver to Venture, and then had a little 2016 rally, even up to 2018. But this year, again, just fallen. No rallies, pretty much just down straight. No buying. So pretty much in all of 2018. So again, we've reached the cheapest levels in 20 years in the TSX Venture, and could be on our way to test those 2016, 2015 lows with the tax law selling this year. So it could be a pretty volatile next couple of weeks here. But again, we're reaching 20-year lows, an extreme bear market. We're beginning to see asset resets, with the stock market and the overvalued real estate market. Interest rates are beginning to rise. And like we haven't seen in many decades, actually. U.S. interest rates are rising to higher levels. So we're beginning to see the asset reset with the stocks and the real estate, but here we see that the venture index has been pretty much in a downtrend with lower highs and lower lows since 2007. So that's now going on 12 years. So many people have left the venture index. Many of the funds have gone to chase these overbought sectors such as real estate and stocks, have left the commodity space and the junior mining space. But what we saw in 2007, and for that whole decade, pretty much from 2000 to 2007, before the credit crisis, we saw, an uptrend in the commodity space. And from 2007 to now, the end of 2018, we're still in this long bear market. So then here, if we take a look at the stocks, what we see differently with the larger cap stocks is the too big to fail policies that came out in 2009 has had a huge impact on the large cap S&P 500 large cap stocks, but has had relatively no to little impact on the small cap venture stocks. So we have a very small window of large cap stocks, and the funds that have gone into the larger but the smaller companies have not done as well. And even if you look at the Russell indexes, those are already pretty large companies. The small cap venture indexes and the commodity space, we have not seen since 2007 any sort of recovery in this area. And we know in mining that that investment translates into potential resources and discoveries. That's been lacking now for 12 years of declining funds, declining budgets for mineral exploration, whereas most of the people have left into the large cap stocks and into the real estate market, which has become extremely overbloated, overvalued, and affordability across the United States and Canada is pretty much hard to find anything affordable. So if we get there's going to be a reset. Things go back to the mean. That's the way nature goes, and in the markets. So you tell me what the charts are telling us. Eventually, there has to be some sort of balance and equilibrium. The herd is going after the stocks and real estate and chasing that momentum, but we still believe that the commodities are so oversold, so cheap, that if there is this reset with these higher interest rates and this huge debt and deficit level in the United States especially, if we do see this reset with the US dollar, because the trade war, really the whole trade war is about the currency. And right now the Chinese are winning with a very cheap currency, and the US dollar with their very expensive currency is not able to um, export items. So it's very good for the Chinese, but we're losing that trade war, and that eventually there could be policies to shift that. And when that happens, our commodities and junior mining space is going to come back into favor in a serious way. So, as a market historian, market analyst, the first chart, if you want to study the global economy, is you look at copper. That's why they call it Dr. Copper, because it's a PhD in the global economy. And if you notice here, when the copper price was doing very well, when that whole Chinese expansion, the new emerging economy, when the emerging economies are doing very well in the 2001 period all the way up to the credit crisis, we saw copper go from below 75 cents to almost $4 and $4 a share, $4 a pound. So that's what we saw pretty much up to the credit crisis. Then we saw a huge decline in the copper from $4 to $1.25 during the credit crisis, and then we recovered those 2 years, and we saw that with the venture. It recovered, but the venture didn't hit a higher high. Copper did hit a higher high, but has since 2011, other than this little rally that we had pretty much up to 2018, before all these trade wars and concerns about China happened, these policies. Other than that, we've been pretty much since 2011 in a basing declining market. But the long-term trend in copper is still up. And copper is ready to make, I believe, a higher high from 2011. Because if you look at mine supply, you look at the demand from electric vehicles and the demand for copper globally, and especially with the declining mine supply, copper is set fundamentally to make new highs. The question is when, not if. And we see here, if you draw a long-term average, you'll see that the copper is in an uptrend and ready to make a breakout. So what am I looking here for? You know, I'm looking for copper again to break through the 325 area and to challenge those old-time highs back that we saw in 2011. But look at where the venture is versus where the copper price is. So the venture is still priced at those bear market levels in 1999. But the copper price is $2.75. So the venture is still priced when copper was below 75 cents. So there's a lot of opportunities, especially I believe with some of the copper exploration stocks, especially the high grade copper stocks. We saw a couple of companies this week come out with some good copper results, including Sun Metals and Lorraine Copper, that came out with 100 meters of 5% copper. Those are very good results, some of the best drill results in Canada. So that should be on investors' radar. Prize Mining, PRZ, came out with news this week as well with drill results of copper. It looks like a large system in Mexico trading because of tax loss selling at ridiculously low levels. Plus, they have a resource in BC, PRZ. These are both positions I have. These are all positions I have a position in, and the companies are website sponsors. So my job is to get their story and let investors know about some of the good results they've had. So stay tuned to goldstocktrades.com. I'm expecting a lot more news and a lot more developments, especially after the tax loss selling season. We only have really about a month left for that before we can start seeing a rally. So spend these next 4 weeks coming up with a list of really good copper exploration stories. Uranium price is beginning to break out. Cameco is building a huge cup and handle. I think that we can see a big breakout in uranium. And there's been some good recent press on the uranium story and the battery metals. So expecting a lot of news and a lot of good stories going into the next week. So stay tuned to goldstocktrades.com and have a wonderful weekend.